What's up, Internet? My name's Ian Bloom. Welcome to Nerd Finance. I'm your resident financial life planner and huge nerd. In today's episode, we're going to be covering HMOs, or Health Maintenance Organizations. This is obviously a continuation of our health insurance series, so if you'd like to learn more about different types of health insurance plans, we have videos that have already come out, a video that will be coming out, and there's a PDF guide down below that summarizes the information from the videos so that you can compare these plans sort of side by side, so to speak. If you have any further questions, health insurance is a pretty important decision, so don't be afraid to reach out. That said, let's dive into HMOs. HMOs own facilities. What I mean by that is, unlike a PPO where you're going to have your rates negotiated with a provider, which is what the in-network care is, HMOs literally own a lot of the doctor's offices and hospitals that you will be able to go to. And as a result of that, they only charge you a small copay to use those facilities because you're effectively paying the network by paying your premium. So that's nice. The downside to that, though, is that if you live in a rural area, HMOs might not have all the services that you need available. You might have to drive somewhere like to Raleigh, for instance, which is where I live, in order to get access to all the types of care that you need. So HMOs can be geographically based. That said, let's dive into some of the stats. On the coverage side, as long as you're in network, HMOs give you about a 9 in coverage. It's pretty comprehensive, and you usually only have a small amount of costs that you have to front load in order to be able to use the services. However, on the flexibility side, it's about a 1. Frankly, HMOs don't usually pay for coverage out of network, and if they do, it's very, very minimal. So as a result, only emergency care can be taken care of out of network, and so your flexibility is quite limited. On the other hand, that lowers your legwork, which I'm rating at about a 2 out of 10. You do still have to choose providers within network, and sometimes you have to be referred to specialists, so that means that you might need to do some work to get to the specialist you want to. But that said, it's usually pretty simple. And on the premium side, it's about an 8 out of 10. HMOs are usually a bit expensive because, like I said, you're essentially front-loading the costs of care with your premium. You are paying the network for the services you may or may not need that year. Well, that tends to be more expensive. So in summary, HMOs are kind of like prepaying for anything. They can be very effective if you need the services offered, and if you're in the area, that can be helpful, but if you're not in the area or you don't use a lot of care, they can be quite expensive, so keep that in mind. And as I said at the beginning of the video, if all this sounds like a lot to you and you're worried that you might not be making the right decision with your health insurance, first check out our PDF guide or just book some time to talk. I'm happy to help you out, and to be honest, I leave time in my calendar for these types of services during open enrollment. First meeting's always free. Anyway, I hope you have a wonderful day. Thanks for watching.